Good morning, guys. Doing a quick mic check, and you should see my two charts for today on NQ and ES. Are those coming through clearly? Okay, great. Thank you, Damien. So I hope everyone had a good weekend, a restful weekend. It looks like, at least in the early going, that buyers are back. So what was I going to say? I know what I was going to say. Let's take a look at how we're starting the day. So we got a fairly good sell-off Friday into the close. I don't know that anyone necessarily expected that. And again, just to make sure y'all are, I have multiple screenshots to make sure we are looking at the ES. We've had a couple of stop and go starts and stops on that. You see my mouse moving on the ES chart, correct? Anyone? Bueller? Okay, thanks, Damien. Okay, so yes. So clearly, we had this downtrend coming off of Friday afternoon, pretty easy to see. And then obviously we're gapping up somewhere in the 1641, right at the back, 1841, right at the back of this zone. So we have the same issue today that we had on Friday with regards to risk, and that is up on tops, while they can prove very profitable and they tend to reject multiple times before getting broken, the risk is that we break the back of the former top. You get a cash squeeze, meaning money from the sun lines comes off and gives us a big push. And anyone who was short or anyone who's built up shorts over the last couple of days will be forced to come in. Again, it is my understanding after doing a bit of research this week that in terms of annual short positions, that the ES is at its highest short per professional traders than it's been really at any point over the entire last year. So if we do break to new highs, there will certainly be some type of reaction with shorts covering. So let's just I'm going to try and streamline this process just a bit. Assuming we open at 1841, so we won't be opening the white zone. The white zone is actually up here at 1845 and 3/4 to 1843 and a half. Notice that it is intentionally one tick wider than it normally is. So it's 2 1/4 wide as opposed to simply 2. You just might want to have that. That's not a mistake on my behalf. So it's going to go one of two ways this morning. We're either going to open up right into Globex high and reject underneath and come back in either for a test of half gap, which would be roughly 1836, or fill the gap completely, which would be 1834 and a quarter. Of course, that assumes a lot. We're still a good 30 minutes, 45 minutes away from the open. But assuming that we do open up here, we do stand, I think, a good chance out of the gate of getting rejection and coming in for half gap or gap fill. That'll be my gauge for determining the strength or weakness, particularly in the first hour. So that's going to look a couple of ways. And the way I kind of went through in my mental exercise this morning, it's going to look like this. We're either going to open up 1841 and drive straight up, either through a single candlestick or, three candles like this, either one of these scenarios, one big candlestick or three candlesticks up into the white zone, okay? If we get to the white zone in this fashion, the only place I'll take a trade on that will be at the very back of the zone, and it'll be with a 2-point stop, and you have to make a simple decision there in your trade plan. Either you're going to take that trade and accept that you might get stopped very quickly, right? Or you're just going to pass and let the market get reset. At highs, right, if it busts, it's going to bust fast, and there's no safe way. There's not going to be a, quote, tell that's going to go, oh, it's okay to enter the trade here and get your 2 points. They're going to make it hard, particularly in the first hour. So if we get an open drive scenario, I'll default to what my normal trade plan is on, sorry about that, on trend day up, which will be, I'll be very cautious in the first hour on counter trades. I will look for confirmation in NQ, meaning I want NQ to be hitting new highs as ES is hitting new highs. And if that's the case, if that's what I get, there's only one more caveat to today's trade, and that's this. If we get the zero tick, and clients who've been with me for a while, that's when the NYSE tick hits 0 for the first time. If we are in the white zone still, when that hits 0 tick, I will pass on my white zone long. The reason for that is, my concern is that we get up here and we linger here for a little bit and we push back down, right? So it's simply uncomfortable for me to take trades at the very high when we're gapping up into them, even if we're open driving up. And my choice on how I'm going to handle that is going to be simply to say, I'm taking a pass on the trade, pure and simple, and move on to the next one. Now, if on the other hand, we open drive up and we get right to the back of the zone, right out of the gate, I probably will take a short here and just accept the 2-point stop if that's what's going to occur. The difference being, I want to be clear on what the audible is here. If we're in the white zone and we get a 0-tick reading, normally that's a great entry for a long on a trend day up. I will most likely pass on it if we're not above the white zone. However, just small difference, right? If we're trading above the white zone, kind of doing one of these jobbers, and then the NYSE tick comes into 0, I will be happy to take the long from this point. I have an easy stop right behind the white zone. Usually on the 0-tick trade, I take very little heat, particularly on the upside. It's generally been less than a point or a point and a half. Again, make sure, don't take this just because, oh, Simon's calling this trade out. Make sure you've done your research on it and that you have your own trade plan with your own stop parameters and your own risk parameters within this trade if you're going to take it. Otherwise, it's fine to skip. So moving on with the trend day scenario. If we get a gap, open drive, right, and we hold above the white zone, the next place to take a trade will be initial resistance. The question is going to be, where do we base, right, in front of that data? If we base right here, I still want a 6-point extension, right, on every trade, and I want to go through and be clear on this. On each, the only reason I talk about extensions, pauses, time in the zone, these are just additional filters like you can put onto the trade on an edge that's already highly effective. I want to be clear. Each zone, I expect a pause and or some type of counter rotation, even on trend days. And you'll notice on most trend days when we get to a zone, we generally don't blow straight through the zone. What usually happens is we'll come up to the front of the zone, get a little rejection, and then we'll spend about 30 minutes sitting in the zone, and then we take off to the next level. So I will be paying attention to that. If I get to 25 minutes and I haven't been able to get a scale, I will cover the trade today on any of these zones above if we get into a gap and then an open drive situation. Okay, if we don't get, I would expect no matter what that we get a initial seller's response between 1849.50 and 1851.50. And if it's an open drive scenario, when we get here, I will target that trade towards the back of the zone with the caveat, right? Again, I'm going to put caveats in because of the potential for trend day up, right, into new all-time highs on both NASDAQ and ES, with the caveat being that if we're open driving, that I'll only take that trade at the back, and I'll only take it if it's the first time into the zone. Okay, so if I get one of these jobs where it comes in, rejects out, I would have gotten my 2 points, then it comes back in for a second time, I will not be taking that second trade on a trend day up scenario. And the reason I'm going over this in so much detail, it's not because I think it's the highest odds of what's going to happen, but I don't know how we're going to open. I simply don't. And the majority of retail traders take their largest losses on trend days up, where they keep shorting and shorting and shorting and having the market drive against them, drive against them, drive against them. So what are some of the other characteristics we'll look for the open gap along with the open drive? The tick will be mostly positive, if not 100% positive, over the first hour. The rotations will be very small. Generally, they're less than 2 points, right? And on the first bar, whatever that is, whether we get a scenario like this or we get one straight bar, that first bar, whatever the opening print is or the low of that first 5-minute bar, will hold for the first day. This is not the only way we can get a trend day up, but this is the easiest way to identify a trend day up. Okay, so I think I gave my scenario on that side. That being said, unless we gap above this white zone, I don't expect us to break today, and I'm going to go with a normal scenario. And so what that means is, assuming we open up near this, well, now we're a little bit away from it, but assuming we open anywhere between 1839 and 1841, right? My primary scenario is going to be look for half gap and then gap fill. And I'm going to be, if I get down to gap fill, assuming that I can get at least a 6-point rotation, I will take a long somewhere between Friday's low and gap fill. If I cannot get a 6-point rotation, I still may take this trade. I just want to let people know I will not call the trade out if I take it. And the reason for that is because A, I need enough time to get both of them done, but B, it is a more aggressive trade when you're getting a small rotation. So you have to decide in these areas. And what should lead you in this decision-making process are your own stats, right? There's a trade with less than 5 points when it's coming into a key area in the morning. Does it pay you or does it cost you money over a series of 10 or 20 trades? That's the decision you have to make. So assuming that if we're going to get this 1841 test, if we got 1841, 1834 on a downside move would give me 6 points, and I'd be more than happy to take that to the long side, either at the front of the zone or the back of the zone. Just depends on where I get that 6-point rotation. I want to be clear, I will take a long at Globex lows, assuming we're not there on the open, right? Again, if I get a 6-point rotation, somewhere between 1831 and 1829 and a quarter, I will take a long, preferably 1829 and a half would be probably my ideal trade location here. What will be the signs of strength, by the way? If we gap here and we're unable to get half gap or complete gap, that's your first sign of strength. So we could certainly open here, pull down, not get half gap, and then take off. You have to keep that scenario in mind. If we get that scenario, I would expect a counter rotation in each and every zone on the way up, and I will trade it that way. On the downside, if we open up at 1841 and we close half gap and we come in for the gap, I would expect a counter rotation here for 2 points, but I will be all out. I'm not looking to close this gap and then have us come back and look for a test at higher levels. I'll happily reposition myself after the break. I also want to keep something in mind. I've gone over this with my clients in the past, and that is when we're trading at a key area, meaning this high, right? This high is being the reason why we're getting so chopped up and we get this trade action that we had on Friday, okay, is because people are defending it. There's some large player trying to push above, and there's clearly a very, very, very large player right here determined to keep the trades down. Now, that large player could have simply been defending an options position so that if we get back up into this area today, that defense of that option position might be eliminated. So I would not assume that just because whoever was defending this here on Friday, I would not assume that they're back here defending it today, because there's Ops X, feel quite comfortable, had a lot to do with defending this particular position. And when you're talking about guys with billions and billions of dollars, they have the ability to do that. So also keep that in mind in the white zone on the open when we get there. As I said, I do expect rejection, but I'm not certain that the sellers that were there on Friday are going to be back if we get up here. And so I'm not being clear here this morning. I wanted to, and I thought this out really clearly. The base game plan is I still will take a short here. I still will take a short at 1841 if for some reason we can gap down closer to gap fill and we can get a 6-point rotation up into Globex highs. I'll take a short here in that scenario, and I'll take a short here in the scenario. I will short initial resistance, and then above that as well, this 1854 to 1856, I'll be taking a short there as well, all the way through. I'm pretty much, once we break above the white zone, I would expect normal trading from there on up, meaning we get up here, we reject, we move up, we get up here, we reject, then we move up, that type of scenario. Time-wise, again on the upside, if I see an open drive higher and I identify that it's a trend day or a range extension day, the first thing I'm going to go and look at is at what time do markets usually reverse or stop. So let's go take a look at that. 9:30, starting at 9:30 a.m. is really where I'm going to start to look in earnest for reversals all the way to 11 a.m. This is prime time for getting a reversal on the upside or the downside. If you identify an open trend day up, potential trend day up with an open drive, many of my clients simply go hands off until 9:30 a.m. and then they let the market set it up for themselves. Do they miss some trades sometimes because of that? Yeah, but they very rarely get just simply steamrolled in the process of having a hard drive to the upside. Again, I don't mean to be overly cautious, but when you see gaps near the highs, you have to be concerned about gaps and goes. So let's talk about the downside scenario really quickly. assuming that we open up at the 1838 3/4, assuming we open up at the 1838 3/4, well, basically right here, right? That would be sufficient for me. Let's say 1840, it'd be sufficient for me to take a trade here. I'll take a trade here. And then what I'm really watching out for on the downside, right? We've seen repeated days where we get this pattern. Open. We get responsive sellers that push us down. We get below Friday's low, Globex low. We come into this 1827, 1825 area. And then we recapture Globex low or Friday's low. That would set up a trap trade. If we get a trap trade set up, I would expect us to travel to the other end of the range, right? Same thing on the upside, by the way. If we trade above Friday's high, and then we trade back below, which would mean anything underneath 1843.50, right? Or if we clear the previous high, which is up here, reject and then close back below. I didn't mean to do that, heck. And we close back below the white zone, I would expect trap traders, and I would expect them to make an attempt to push back down towards Globex lows. And that's my favorite trade right now. Why is it my favorite trade? Because it's been working over and over and over again. And if you can leave trailers into this setup, it works fantastic. But more importantly, even if you see this, right, if you know that we've just closed back, we've attempted to break, right, we've come back in and we've closed back below. What that tells you, the good information that it gives you is you know that we're going to travel to the other end of the range. The other end of the range is either going to be Friday's low or Globex low. And what that means is when we get into 1841, right, I know to be cautious here because there's a good chance we can simply blow through that zone and come down and test these zones lower. I hope that makes sense for everybody. It eliminates having to take additional risk should that scenario come into play. On the downside, I expect to find responsive buyers at this 1827 to 1825, and if I don't get it there, I certainly expect them down here at this 1819.5 to 1821.50. Again, I'm looking for 2 points out of each of these zones, and usually if we're going to get a good wide range going, and from the looks of pre-market we will, I'm going to expect those 2-point rotations at each zone, which is great. That's going to make our day. The only point of watching out for the trap trades, right, from my most basic perspective is if I recapture Globex lows after breaking it, again, looking at it from the flip side of the coin, I know that we've recaptured the low overnight, that we probably have sellers trapped underneath, and they generally attempt to push to the other end of the range. Well, the other end of the range is going to be one of two places, 1841 and or 1843, one of those two. Do they have to? No, but that's what I'm going to be cautious of. So what does that eliminate? That eliminates me taking a short at Friday's low, knowing that we've recaptured the Globex low and that buyers will probably make an attempt to push all the way back up to the other end of the range. That's how that plays into hand. So again, let me be clear. I want 6-point rotations. The white zone above, the only reason why it's challenging is you're right at all-time highs. You always have the potential to have it blow straight through if the person, whoever this was, whatever institution was defending right here, is gone because options expiration has been finished, then we do bear the risk of blowing straight through. We'll have a better idea of how strong a possibility this is based on what kind of opening type we get out of the gate. Other than that, it'll be business as normal. 2-point targets out of each of the zone. And for trade placement, I'm looking at where the 6-point rotation is. We haven't had extremely wide zones over the last couple of days. So I'm going to move back to the 6-point rotation until that shows me that I'm wrong in terms of trade placement. Let's go look at, the other thing that I would put on your chart, by the way, is I would have a trend line coming off of Friday afternoon that goes just like this. Either this or this. And the reason for that is I simply want to see how the market is treating the backside tests of these downtrends that we had, right? So again, I don't trade them, but what I would look for, assuming the open at 1837 would put us right in the middle of these two, right? So if we come up and reject off of this, and then we start to roll over to the downside, the first thing that's going to tell me is, okay, it's respecting this trend line. What's the other side of this trend line? Well, I'm going to take it and I'm going to go just like this. And again, this is just to give me some idea of, hey, where might we be headed? There's nothing scientific about it. It's purely visual. I'm a visual person. It helps me tremendously. So when I look at this, if I knew this was the trend line that was respected and we get back below, I'm going to look on this bottom part here. I'm going to change the color so it's easy for people to see. I'm going to look on the bottom end of this trend line for where I would expect, right, a natural response. And then I would expect to see something like this as a possibility to the downside. Also, I'll be looking, we were setting a series of lower lows and lower highs. So the first thing in the morning on a RTH chart, meaning regular trading hours, I want to see if we start setting a series of higher lows and higher highs, right, to throw off this pattern. Otherwise, I'll just assume this is a gap to trap overly eager traders who assume we're going to break to the upside, and we could easily trap them and take them all the way down to initial support. Would not be a shock. Our average range, if you go and look back over the last 3 weeks, has been 20 to 30 points. So the other thing that you should be doing on your chart, just so you're clear on it, right, is if we close at 1834 and we drive 20 points up, right, that'll put us right into this 1851, almost 1854 area, right? That would be 20 up, 20 down. Conversely, put us down into this, well, actually all the way down to, let's see, where are we? 34 and 20 would put us at 1815, which is right here. So those are the range I would consider range extremes. And if we got 30, tack on 10 points to either side of that. We've had those ranges. Also, keep in mind, so you don't get caught being overly bullish or overly bearish, guys. Let's say this morning we trade up into the white zone and your brain's thinking, boy, we're going to break out and just go straight up. Always take this part of the trade and go, well, what happens if we don't break out? Where's 20 points away from this? Because that's certainly a possibility. So 1845, right? We certainly have a possibility from 1845 to roll all the way down to 1825 and then come back into the middle. You got to keep in mind what the ranges have been. We had a fairly subdued range on Friday, but I got a feeling, again, options had a lot to do with keeping a cap on that. And so always think, where's the flip side of the trade? Let me see how I'm doing on time. Okay, I want to wrap this up here in the next minute. I want to look at NQ really quick. I've already put the trend lines on there this morning. A couple of key areas. Friday's high, again, I believe if I'm correct, and I am, that's an all-time high right there. Obviously, I want to see NQ lead ES to the upside, and I believe it will, just like it led it to the downside. You'll notice that I believe NQ got a lot weaker than ES did prior to us rolling over on Friday afternoon. I would like to see a series of lower highs and higher lows start to get set if we're going to have an upside move. Again, gap fill and Globex low, right? Two critical areas. And so what that makes is this entire area down here, potential area for reversal. And also keep your mind and keep your eye on the potential for a half gap fill. At this point, we're trading all the way down to 3671 now. So we're trading right here, which will probably pretty much take half gap off the table for me. And I'm only looking at gap fill to gauge the strength up. If we were opening up here, half gap would have worked, but we're not. That being said, also, if we're opening up at this 1837 level, 3670 level right here, that keeps us stuck on gap basis right below the bottom of this trend line. So I want to do the exact same thing on NQ as I did on ES. I'll take the parallel and find out where the other side of the channel is. It's clearly approximately right here, right? And if this pattern continues, as you can see on Friday, we just kind of went through one of these jobs all the way down. And if this is the case, right, keep in mind, particularly in the first hour, if we're unable to get above these two trend lines, what I'm talking about is here and here. If we're unable to get above these two trend lines, right, your downtrend is still intact in that case. From Friday, we simply had a short squeeze before the open, which is a possibility. And what that tells me immediately when I see that is I'm going to come over here and look at this 9:30 hour today, right? We carried over to today. And that's the time I'm going to be looking for key reversals back to the upside, and that can be anywhere from 9:30 a.m. all the way over to 11 a.m. I really don't have anything else in terms of breakout or breakout retest areas that are critical in terms of the day. If we look on NQ, this area right here, this 36.30 to 36.25, and really all the way down to 36.20, I would expect responsive buyers down here in this area. Size-wise, right, if we trade down here, opening up at 36.71, you take out 30 points, that puts you at 36.41, the back of this zone. So here, here, and here are all areas I'll be looking to get responsive buyers. The caveat being, if we push all the way down like that, is I want it to be after 9:30 a.m. And if you're trading on the safer side, there's also, you know, this pattern where we set a higher low prior to moving back up. But I would not continue pressing my shorts or initiating new shorts on the downside after 9:30 to 11 a.m. without getting some kind of counter rotation back up that's significant and meaningful, or unless it bases all the way through lunch, right, unable to recoup on a downside move, and then that would create a potential downside move late in the day. I don't think I have anything else besides that. Like I said, this is a key area. This is back to where we broke out from. This was prior, was a double top that was unable to be penetrated. So I would expect it to be defended on the first time down, and that would simply be a breakout retest type of pattern that would let us go higher. Let me look at one more thing here really quick. That is, I want to make sure I didn't miss any major news events today, but I don't think I did. And I have absolutely nothing. Oh, by the way, so that does bring up one more thing. There is no news pushing the market. So usually what you end up with in both ES and NQ is something that looks like this through the course of the day, which is balance. Okay, so balance can look three ways. We can do a job like this, right, up and down. It can break lower, right, and then trade in a range like this after the first hour, go into balance. Or you can get the mirror image of this, right, on the upside and have it go break above Globex highs, and then kind of get a trade like this all morning, right, where you get a drive up, and then it just gets a range extension where it balances all day like this. Again, no news. Automatically brings up a couple of things for me. I expect it to be somewhat choppy. The moves won't be as crisp. That doesn't have to be, but I'm prepared for it, right? And then the other thing, like I said, is I do expect balance. What's the other thing that will accommodate a balanced scenario is that the tick, NYSE tick, symbol for that is $TICK on TradeStation, will stay predominantly between plus 500 and minus 500, just like we had on, if you go back and look at Friday, let me change that real quick. If you look at the tick on Friday, I'm not going to pull it up, so it's going to take too much time. All of this, after this point right here, this was all done on 500 tick, plus minus 500 tick. There were no tick extremes. This is the definition of a grindy, choppy balance day. Also, I want to point out the trap trade right here, right? While it was a small range by the time it actually broke, did trade all the way to the other end of the range and then pop back up. So initially, given the overnight range, I actually don't expect to have too much balance, but I will know after the first hour. And importantly, I want to go back and just cover this because really I've covered all the important parts here, which is A, it's been a little bit slow. Don't let that frustration of not getting a bunch of trades in that morning hour move you to the point of making a poor trading decision or frustration. I find that with a lot of clients that I work with. Once they've gone, usually when they start with me, they've either gone from a boom-bust cycle or difficulty accumulating and holding on to profits, right? Or some of them are losers. But once they eliminate that cycle of that boom-bust or eliminate that cycle of constantly losing, what happens is after a couple of months, they go to a process where they're like, hey, I'm used to making money every day, and here I am, I've gone through a whole week, and I've only had a few trades set up for me. You got to put reference to the environment, right? The zones are clearly working. Friday was Every zone worked on I think without exception on first touch on Friday, regardless of rotation. But, and here's the caveat, right? You have to keep in mind that we've had pretty big shifts from markets where we're ripping straight up and straight down to markets last week where pretty much every zone gave a pause and a rotation and was really pretty easy to read. And what that causes you is to get cautious on pulling the trigger too quickly because you don't want to believe what you're seeing. All I can tell you is I've been through this before. If you go back and look in October, where we kept having these open drives and zones were getting busted. If you're patient, the market will come back to us where we get a two-sided market, meaning we get nice fat 10-point rotations down, nice fat 10-point rotations back up, right? If you can get through this period of time and slowly accumulate profits, not dig a hole, when the market gets sweet again, that is when your account, A, will be able to recognize it. Usually it lasts for more than a day or two. B, that's when your account can take massive increases in equity size, right? And C, your psychology is intact because you haven't wasted a lot of energy fighting a market that's not offering you a lot. So keep that in mind. Stick to your stops. We're only looking for 1 or 2 trades a day for 1 to 2 points of rotation, right? If you get to your rotation, if it gets to 7 out of 8 ticks or 6 ticks on the bid out of 8 ticks, and you don't get filled on your order, go ahead and move your stop to break even, protect a trade, right? Too many traders side on the fact of the opportunity versus the defense of the capital. If I'm going to make a mistake, I want to make a mistake on the defense of the capital until I'm getting trades working for me. And if you'll go back and look at the zones at what trades work, usually a trade will spend, for trades that are really good, 5 minutes to 12 minutes in the zone before rotating out and giving me my 2 points. Can it stretch longer? Yes. But once I get past the 20 to 25 minute mark, the odds drop dramatically. And so it should be in your trade plan what you're going to do beforehand. One other cue to trade plan before I drop off here, and that is make sure whatever trade you're taking, right? Once you've taken a trade, you shouldn't be having that many trades that you can't go and look at what you just did and then compare it on your trade plan to, was this what my trade plan called for? If it wasn't, and it's your first trade out of the gate, do yourself a favor. Take a deep breath, switch over to paper trading, get your brain back in line with what your trade plan is, and don't drill yourself on a day where you're not in alignment. Also, take some breaks in the middle of the day. Don't stare at the screen 8 hours continuously. I'm guilty of that on occasion as well. And then the last piece is, whether you're making money on your trades or losing money on your trades, when you take a trade, right then, right, once you're in, you've got your stops in, go and take a screenshot of that and print it. And then at the end of the day, jot down your shorthand notes and then go back in and put into detail. This is what I saw. This is what I missed, right? And this is what the end result was, so you can learn from that process. But be active in your own education in terms of pushing your knowledge about the market and yourself forward. And also jot down, don't forget to jot down, hey, if you got up this morning feeling like $1 million and nothing can stop you, jot that down. See how that's affecting your trading. If you woke up feeling like crap and you're going to try to trade anyways, which I do not recommend, right? Make sure you write it down so that eventually, if you do that 30 times in a row, you can go, hey, the common denominator here was I felt like crap before I sat down to trade. Anyways, have a great day, guys. It's about 6 minutes till the open. I hope that helped. Everyone have a wonderful day. I look forward to hopefully having a very kick-ass week. I've been doing a lot of work over the weekend to step up my own performance because I'd like to see my numbers have dropped a little bit over the last couple of weeks, and I want to make sure that I'm not forcing any opportunities, but I want to make sure that the opportunities that are there, that I'm going to be capturing them for my own trading account and hopefully helping a few people along the way. Have a great one, guys. Y'all can reach me at tradingperform@gmail.com if you have any questions. See ya.